Hey traders, welcome to Charts and Coffee. Hope everyone is having a good Monday morning, had a good weekend, and is ready for what should be a very, very interesting week. We've got two things really to kick off the week with. And number one is today is the last trading day of the quarter, which tends to be pretty volatile in terms of that very final end of quarter repositioning. What is it that money managers, hedge funds, big banks, whatever it may be, entities that are moving a lot of money, all right, whatever you want to categorize under that. It could even be retail traders and mass. How are traders positioning themselves for Q2? Now, if you've been watching this show for any length of time, you know that I'm pretty bullish going into Q2, not because we're going to go straight up, not because the current weakness is not a factor for what we're looking at, but it has to do with time frames and time horizons. We'll get into that in a moment. So first is end of quarter, that's today. Tomorrow is the first trading day of the quarter, and we're going to get the JOLTS numbers. Now remember, the Federal Reserve has a dual mandate. And yes, as much as we're talking about tariffs and the current downtrend in a lot of sectors and indices, the thing to remember about what the Federal Reserve is going to do next. Number one, it is widely discounted that we're going to get at least 2, if not 3 more quarter point rate cuts this year. So let's differentiate between expecting rate cuts and getting rate cuts. It's always the anticipation that's the most bullish. So in the anticipation of a June or July meeting rate cut, probably both, could be one or the other, but we're likely to get a quarter point rate cut in one, if not both of those meetings. Expecting those has a certain bullish, uplift. JOLTS is going to be part of that calculation, that decision, if you will, because the Federal Reserve has a dual mandate. They've got two things. One, get inflation to the target. 2, without screwing up the employment picture. So JOLTS is going to be a big part of that by looking at the job openings. Then we get, and I skip over ADP. Yes, it's sort of a midweek look, anticipation of what the jobs number is going to be. But the jobs number itself is coming out on April 4. That's the next big scheduled event. Of course, throughout the week, you'll see we have lots of Fed members speaking sprinkled throughout the week. But those are the two events that I'm looking at. All right. Of course, I know a lot of folks saying, Rog, but what about the reciprocal tariff announcement? What is that ultimately meaning for equities? Well, look, gang, this is the way I look at things. And we've all heard the saying, buy the rumor, sell the news, or in many ways, what we've dealt with throughout 2025 Q1 anyways, which is sell the rumor. Well, what's the opposite of the sell the rumor? Well, we could buy the news. Why would that happen? Well, you can see here, since the overall movement we saw since mid-February forward, when that tariff narrative really got ratcheted up, what we've seen since is a little bit of a softening of that narrative. Yes, we're going to get them. Yes, there's a lot of uncertainty. I mean, you could see that in the overall movement of the S&P. But here's what I look at, and let's talk about time frame versus time horizon. The news is a very imminent thing. We know we're going to get a lot of news and a lot of data this week, but this is sort of the North Star for any time I look at the broader averages pulling back 10 to 20% from all-time highs. If I fast forward, looking, say, 12 to 18 months from now, this is an opportunity. I know it may not feel that way, and it may not even look that way on the daily, but the daily chart is not equipped to guide us for the next 2, 3, 4, 10 quarters. Its job usually is a very accurate way to understand momentum and trend for the next 2 to 10, maybe 21 days. So think days to weeks in terms of the life cycle of a trading idea on the daily. But when we look out to the weekly, which is what this is, it's a weekly chart of the S&P. Let's squeeze in a little data and really get perspective for what the current down move is. So I'm squeezing into 2022, 2021. I mean, let's put this in perspective. This is what we're panicking over? This, 1.5-inch move from all-time highs? If traders commonly position themselves at all-time highs, agreed, a move of just over 10% is pretty darn horrifying. Let's switch that around. What if instead of sitting through 10% pullbacks after having bought the all-time high, We're instead looking at these pullbacks as opportunities to build longer term trading portfolios. The time horizon, the life cycle of those trades being months, if not years. And that's what I'm talking about. That's where the opportunity is right now. Sure, be a bear, be a day trader, be nimble on a 1 hour, on a 5 minute, even on a daily time frame. But please, please keep an eye on that weekly time frame. Don't neglect the opportunity that these 10 and 20% pullbacks offer if we have expectations, or even the question of, hey, am I going to regret this 12 to 18 months from now? And there's seldom been a pullback of this magnitude that I haven't said, gosh, if I don't do something, at least put a wish list together and do some selective buying with that longer term time horizon. There's very rarely, I'm trying to think of the last time that maybe that happened. It's very rare that I regret going shopping during a sale, right? If you think about a sale, the Wall Street's the one place they throw a sale, and seldom anybody comes. So that's where we are right now in terms of this movement. Again, I am more leaning towards sell the rumor, buy the news. I am more a fan of looking at these 10 and 20% pullbacks in some cases and looking at what I call a sanity check setup. I went into a lot of detail on this in the Friday free video. I want everyone to see what I'm looking at and why, even using tools that are not my proprietary tools, using ways you can say, you know what, let me look at my portfolio. Is this an opportunity to do something to expand the stocks, the sectors, the indices that I have exposure to? And again, keep in mind, not 12 days from now, 12 months from now, right? Not a month from now, maybe 12 to 18 months from now. All right, that said, I am expecting a lot of volatility this week between end of quarter. Doggy, no, the dog's in the pup indicators in the house today. Hey, pup. Yeah. All right. So if we are looking at the way in which today is opening up, this is another thing that I look at. Are we going anywhere new? Tariffs, the tariff announcements are coming tomorrow. We have a gap down today. By the way, in this environment with a short-term time horizon, with a short-term expectation for movement, am I bullish? Oh, gosh, no. Right? If someone were to say, Rog, what could be the way in which we're likely to move based on the way we have been moving? This is bearish chop. This is absolutely bearish chop, and it's acting accordingly. But interestingly enough, in chop, and maybe you've been on both sides of this, sometimes the bulls, buyers, feel like geniuses, and other times the bears feel like geniuses. And if you find yourself in that, where one day it's the thrill of victory and the next day it's the agony of defeat, you're probably in chop. And in this case, we're not going anywhere new. Are we punching up through the higher highs that we saw back on the 25th of March? No. But equally, are we punching down through the lows that we saw on the 13th of March? Are we punching down through 5,500 on the S&P futures? We're not. So this is kind of a well-worn path, certainly a bearish one, that we just keep going back and forth within. So rather than kind of digging our heels in and saying this is, doomed to fail, or digging our heels in and being too optimistic to the upside without acknowledging there's still a lot of hurdles ahead, how about we just take a more nimble approach? Just remember that maybe the time horizon of 1 to 3 days is a good way to position expectations. And if that doesn't feel good, if that doesn't feel right and make sense, go further out. Ask yourself that 12 to 18 month question. And that's exactly what we've been doing in the Sector Secrets Mastery. In fact, we've built positions, and it never feels good to buy a dip. Let me just acknowledge that. When folks say, Rob, buying the dip, what if? What if you buy the high and it doesn't keep going? Right? The same question could be asked either way. So in Q1, we put on some positions to the long side. Yes, we bought Coke at approximately $61. Do you think the news was good around Coke? We bought it down at that level. We bought Altria around the same time at about $51. Again, do you think the news was good? No. So let's not presume that buying anything, usually when a buy the dip is what you're, the strategy, if you will, that you're using. Let's remember, good news seldom accompanies that. And it's not about whether the news is good now. It's about, can we get this bad news out of the way? Can we get this bad news discounted, factored in, baked into the cake, and then ask ourselves, is this an opportunity on this sale? So Altria is another one. Just the other week, we built a long position in Walmart. Not about whether or not Walmart could be something I'd scale out of this week or next, but rather, is this something, again, 12 to 18 months from now, that I'm going to be pleased I scooped up Walmart at about $84 versus getting in at $104, right? Those are the questions. And anyone who bought Walmart at 104, has there been a significant shift in people going to Walmart? Are we not going to see Walmart as a staple continue to be somewhere where people shop? Has anything changed between $104 and about $84? And if by your analysis you say, no, Rog, nothing's really changed, it's just the price is much lower, then kind of that old saying's true. If you loved it at 104, you're really going to love it at 84. And rather than buying it at 104, rather than chasing the headlines, and look, financial media can't help themselves, right? I think I was talking about financial media akin to the Jerry Springer show. And they've got to keep ratcheting up the lunacy to keep our attention. Do yourself a favor. Don't even turn it on. If we think about when things are talked about the most, case in point, when's the last time anyone talked about Bitcoin other than in a negative way? And yet, all we could hear, and most of you, I think I've mentioned this in the Sector Secrets Mastery, weren't your friends and family calling you and saying, gosh, Bitcoin's at 105, Bitcoin's at 110, are you going to buy some? And my answer is usually no, because I don't hate my money, right? If I like the narrative, if the narrative of Bitcoin, whatever your opinion of blockchain and cryptocurrency is it different at 88? Is it different at 82? So this is where if you look and step back and say, hey, this is just over a 20% pullback. And some folks might call this a crash, right? And one trader's crash is another trader's treasure. And that's why I'll look at pullbacks like this. And if I'm wrong, wouldn't I rather be quote unquote wrong and get stopped out from, say, an 88 entry than, say, a 108 entry? So let's keep that in mind in terms of not only chasing higher highs and buying at highs, but the risk reward that it presents. The risk is Bitcoin's got to keep making higher highs to see any kind of appreciation on the trade, while an 88 buy means, heck, if we just cover ground that Bitcoin's already been willing to cover, if we just head higher through levels we've already seen traders buy at, is that unrealistic? So, those are just mindset shifts. Those are just questions that I like to ask myself. This is the weekly chart of Bitcoin. Does it look like a disaster? I mean, the last time we had an opportunity like this was around 55. The folks who said, no Bitcoin at 55 and bought it at 105, now you can start to see where retail traders get screwed up. They're following the discussion. They're following all the pom-poms and cheerleading of Bitcoin at 105. It doesn't matter if it's Bitcoin, the NASDAQ, the S&P, or whatever else that might be on your wish list. A common one I get asked about is NVIDIA, right? Rog, what happened to NVIDIA? It didn't hold 150, right? Buyers who bought at 150 turned around and saw nobody behind them, because the only way that anything keeps going higher is if the person behind me and them and so on are willing to buy at higher highs. So when I look at the weekly chart of NVIDIA, it's not pretty. A 20% pullback was 122. We far exceeded this, but the same logic that says no to NVIDIA at 106 or 110 is the same logic that says, let's get some. It's at the highest high ever. Let's take NVIDIA out and say, we all go grocery shopping together. I love a Honeycrisp apple. Those things are expensive. They're kind of an expensive apple. Do I go to the grocery store and go, oh my gosh, Honeycrisps have never been this expensive. Let me buy some, right? The logic that we apply in life is so often the opposite of the logic that we apply to trading stocks, to buying stocks for any time horizon, right? So the same logic of, is NVIDIA markedly in a different business now? Have they switched from semiconductors to now selling sandwiches, right? No. So I step back and I ask myself, is there something fundamentally different? Why would anybody chase this up at 150? You can thank financial media for that. And why is it not perhaps an opportunity in this area? Or can I at least start looking for a setup, a sanity check setup in this environment? All right. The other popular question I get a lot of, Tesla. All right, Rog, what about Tesla? Why on earth buy this up at 450, 460, right? Why would I chase this higher? Oh, because maybe financial media talked about this nonstop during the rally. Remember, what's going to be covered in the news is a reflection of what's happening. It's very much confirmation bias. So on down days, all the bearish guests get invited, and on up days, all the bullish guests get invited. But no one's talking setups. No one's talking risk reward. No one's talking time horizon, time frame. So if I were talking to someone saying, Rog, I'm going to day trade Tesla. Oh gosh, we're going to be looking at a 5-minute time frame, maybe a 1-hour time frame with a 1 to 3 day time horizon. What I think today on Monday could be markedly different on Wednesday. That's part of short-term analysis and short-term trading. But if someone said to me, Rog, I'd really like to put some Tesla in my account, I'd say, you know what, 241 looks like a pretty darn good place to do it. Not 441, 241. And again, this is how retail traders get hurt. They follow news and forget it's entertainment. It's financial entertainment. That their job is to keep you tuned in so they can sell advertising to you, right? I'm not being harsh. That's their job, and I respect their job, right? That's what they do, and they do it really well. Is anyone here watching ESPN to improve their golf game? No. So why on earth am I watching other financial television stations to make me a better trader or investor? That's the fallacy, right? That's the false thing. So if someone were to say, Rog, weekly time frame Tesla, it looks about as good as it's looked in a really long time. Is it going to stop there? No, but I'd sure as heck rather take heat, unrealized loss from about a 240 buy than a 440 buy, right? That's the perspective shift. And for folks saying, it's 440, it's going straight up from here. Does that ever happen? Does anything move in a straight up or straight down direction? Of course not. That's where setups and risk management and position size come in. All those things that we're actually supposed to get really good at when it comes to trading, not second guessing the Federal Reserve. I like to make fun of the Federal Reserve members as much as anybody, but that's more, that's not more where I'm putting my money to work. So those are the shifts. My job is not to say they should have done this. My job is not to say whether tariffs are good or bad. I'll leave the geniuses to television to just discuss that. My job is to counterpunch. All right. Our job is to look at what's happening and does it present an opportunity. All right. And that's where we sit as we wrap up the end of quarter. Sanity check, right? Sanity check is best when we understand the right time frame for our time horizon. And that's where I keep coming back to those weekly time frames. So how long could this sale last? I'm looking for this sale potentially in this area. I probably through at least a good portion of Q2. Right? I'm not looking for a V bottom. We're not looking for the kind of V bottom we saw in 2019 or 2020, because those are triggered by surprise monetary policy shifts from the Federal Reserve. There's no surprise here. Powell and company are likely going to cut in June or July, and we could be anywhere from 0.5 to 0.75 of a point lower in the Fed funds rate by the end of the year. We know this. So very unlikely to see a V bottom carry us out, which is why we probably have a little bit more time to go shopping. Get that wish list out there, right? Start getting to work. Panic is the absence of a plan. And anyone injecting panic into the narrative is trying to get you subscribing to their plan, right? For their benefit. So remember, trade your own plan, have your own ideas. Otherwise, someone's more than willing to hijack the narrative for you. Be good to each other, gang. I'll see you tomorrow.